Welcome back to Market Fatafat on ET Now, and before we get back to all the buzzing counters, let's get you an ET Now exclusive where we learn from reliable sources that Godrej General Insurance IPO is likely to open on May 15. Now, Prem Vasta-backed insurance company is looking at IPO of rupees 1500 crore rupees. For more on this, we are being joined by Anurag Shah. Anurag, take it away.
After multiple delays, now Godrej General Insurance is all set to launch their IPO on 15th of May as per our sources, and the price band for the IPO will be announced on 10th May. So total IPO size will be of 1500 crore, in which 1250 crore will be fresh issue and around 11 crore equity share will be offered by existing shareholders and promoters under the offer for sale route. So Godrej is primarily into motor insurance, health insurance and property insurance, and the proceeds from this IPO will be used by company for the further growth to enhance their solvency as per the details we have got. So Godrej is a general insurance company promoted by Prem Vatsa of a Fairfax Group and insurance veteran Kamesh Goyal. Anushka Sharma and cricketer Virat Kohli are also investor in the Godrej General Insurance.
All right, an interesting one. Thank you so much for that, Anurag, for getting us those exclusive details. But let's move on to all the stocks that are moving in trade. And now we have Chandan Taparia joining us on the technicals. Very good afternoon to you, Chandan. Thank you so much for joining us. And the first stock that you're going to talk about is from the FMCG pack. It's Dabur. I'm sure that we are going to make sure that in this entire 30 minutes of the show, we will be talking mostly about all the FMCG stocks that are in focus. But Dabur on the technicals, how is it looking to you?
Yeah, so today we have noticed that most of the FMCG stocks are doing well. In fact, Nifty FMCG index is up by around 2% given a consolidation breakout on weekly chart after the consolidative move last 13 weeks. So I believe that most of the FMCG stocks would be in focus. We have seen decent volume surge and open interest are also heading in the counter, which indicates that some more upside is there. So one can buy Dabur with support of 550. We are expecting a run up towards 585, 590 zone.
All right, that's about Dabur, but moving on then, and let's shift focus to what Hindustan Zinc is doing. This counter was also in focus on the back of the dividend announcement, because do remember when the company did announce that they're going to be considering dividend for this term, then the stock was up around 5 to 6%, and today the company did approve an interim dividend of rupees 10 per equity share. Now this will result a total outgo of 4,225 crores, and also Vedanta, the company's promoter that owns around 65% stake in Hindustan Zinc, will receive a total payout of 2,743 crores. Now the record date for this interim dividend has been fixed at May 15th, but analysts do say that the dividend that has been announced is a little lower than what the street was expecting and hence the fall today.
All right, so that's Hindustan Zinc. That's under pressure for below estimate interim dividend announcement. But let's talk about Britannia. Like I mentioned, we will be talking about most of the FMCG counters. Britannia is in focus because Nuvama has gone ahead and raised the rating as well as the target price, as well as the EPS estimates for the company on back of strong growth prospects going forward. What Nuvama is saying that it expects the company's growth to continue to outstrip the industry and the rural demand to revive in the current financial year, with the onset of a likely strong monsoon. What they're saying that in the longer term as well, Britannia's deepening distribution network, particularly in rural, will focus on driving growth and shall hold it in a good stead. Also, what they're saying is that the company is expected to benefit from the likely recovery in the rural demand. Weak rural demand trends have been weighing on the industry for over a year now, actually. So they've gone ahead, upgraded Britannia's rating to a buy from a hold, raised the target price to 5,820 rupees per share from erstwhile 5,395 rupees per share. And this sort of a target is also substantially higher than what the earlier target price was, and they've raised the EPS estimates by 5%.
All right, moving on then, let's shift focus to another earnings candidate, and that is Gujarat Gas. Ankita, take us through how are the earnings this time around, and even what are the brokerages saying?
Well, absolutely. This one is an earnings candidate. In fact, this one, despite posting strong set of results, has succumbed to the selling pressure like the rest of the market. Is trading with cuts of 0.7%. But strong set of results coming in for Gujarat Gas. In fact, it's seen an uptick of 5% on the revenue front. The net profit has seen a jump up of 86%, and the EBITDA is also up 48%. The board has also recommended a dividend of 5.6 rupees per equity share of rupees 2 each to the shareholders. And the factors that have aided strong set of results are lower gas costs and higher volumes that really aided the quarter 4. The CNG volumes were the highest ever at 2.89. The company has also signed a volume of 0.77 SCMD, which will be commissioned in the coming days. And also, they feel that the current results show the company has headroom to keep the gas prices in Morbi region competitive enough to gain more volumes. Also, JP Morgan has come out with a note, and they're maintaining an underweight, but they've hiked the target price to 396 rupees per share from 360 rupees. They feel, this is a big positive for the company, and they've also appointed Rajesh Shivadasan as the Chief Financial Officer starting May 6th. So a couple of news flows on that one, but right now it's trading with cuts of 0.7%.
All right, moving on then, Snehi, let's talk about Titagarh Wagons then, and this one in focus on back of a brokerage note.
And focus on the back of a brokerage note coming in from Morgan Stanley. It's a positive note coming in. They've initiated an overweight rating with a target price of 1,285 rupees per share. They also see strong evidence of a revival in India's railways, and they believe that Titagarh is a large beneficiary of this revival that they're penciling in. They view freight as a cash cow for Titagarh and passenger business as a new growth engine, and they also expect a strong 28% earnings CAGR over FY24 to FY27, which is over the next 3 years, and that has optionality to drive exports growth through low-cost local manufacturing. They're valuing the company at 35 times FY26 price to earnings. They believe this is a fair valuation given strong earnings visibility and improving return ratios. So on the back of this positive note coming in from Morgan Stanley, the stock is doing pretty well amid a subdued market, and it's up 6% as we speak. All right then, that's about Titagarh, but moving on, and the IT counters are really holding themselves quite well in this volatile market. And Chandan, from the IT pack, you have picked up TCS. Tell us about how is the technical setup looking like for TCS?
Yeah, so TCS is holding well even after the market decline, and I think with the support of FMCG and few IT, Nifty can reclaim the immediate zone. So TCS has given a consolidation breakout of last 13 days. It managed to hold the immediate barrier of 39.20 marks, and I believe because of that some more upswing could be there. And in this market scenario where volatility is moving higher, participants will try to select the counter where beta and margin of safety is there. So I believe that is the reason that we like TCS as current level, with the view that downside is kept. One can buy with support of 38.80. It can head towards 41.20 kind of levels.
All right, that is all about TCS. But Srishti, a lot of stocks, not from the larger space, but from the mid-cap space, have reported their earnings, and they're moving on back of that, isn't it?
Well, yes, absolutely. And one such stock, Cheryl, is Ceylon Exploration. What a jump that we have seen today. And the last time I checked, the stock was actually holding on to the gains, and on your screen you can see that it's 16% up in today's trading session. The reason is clearly the earnings. Revenue has seen a jump of close to 26% on a quarter-on-quarter basis. The profit is around 12 crores, and that's a jump of more than 100% from the 6 crores of profit what the company recorded in the last quarter, that is Q3 of FY24. EBITDA has also seen a jump of 49% sequentially, as well as the margins have seen an expansion from 43.2% to 51.3% this time around. And Street is definitely liking the great set of numbers that has been reported by Ceylon Exploration, and the stock is getting rewarded quite well today as well.
Absolutely. Let's talk about another earnings then that is moving on back of good earnings, and that is GHCL Textiles. And that particular counter also, if you see on a quarter-on-quarter basis, they made a good up move. The stock that I'm talking about is GHCL Textiles, not GHCL. It is the demerged arm coming in for GHCL. So GHCL Textiles has seen an up move of as much as 9% on an intraday basis. If you look at the revenue, it's seen an uptick of about 17.1% on a quarter-on-quarter basis, coming at around 286 crore rupees. The EBITDA has seen a good uptick of about 52% on a quarter-on-quarter basis, coming in at around 28 crore rupees. The PAT also has more than doubled on a quarter-on-quarter basis, coming at around 10 crore rupees as against 4 crore rupees. And the margins also 230 basis points expansion coming in for margins at around 9.9% on quarter-on-quarter basis. So that's the reason why we have GHCL. At one point in time, the stock was trading higher, like I mentioned, around 8 to 9% or so. Now the stock has given up some of the gains with the rest of the market. It's trading higher by about 3.9% as we speak.
Right, that's about GHCL Textiles, but the FMCG basket, like we were highlighting, is holding quite well. And Chandan, another stock is ITC that is in focus today. Tell us more about ITC, because this has been in the news flow as well. But are you looking for a good rebound in ITC today?
Yeah, so most of the FMCG stocks are doing well, and ITC is all set to head higher after the consolidative move of last 7 trading session. The good part is it managed to hold immediate support of 430 and holding well near 440 zone now. So I believe with support of 430, we can look for an upside move towards 460, 465. And most of the FMCG are doing well. So I believe ITC will also see the movement for 4 to 5% from current level.
All right, talking about the consumption pack, the FMCG pack, Godrej Consumer Products. Ankita, take it away.
Well, yes, look at the stocks. Sharp spike coming right at the start of the day. In fact, it was trading with gains of 8% to hit its 52-week high. Right now, also, it's trading with gains of 7%. This is after the company reported the fourth quarter earnings that beat the analyst expectations. Now, the revenue came in higher by 6% on a year-on-year basis. The consolidated volume in the quarter grew at 12%, with India business volume growing by 15% and Indonesia volume growing by 12%. Now, the EBITDA also saw an uptick of 17% on a year-on-year basis. The margins also saw an uptick of 230 basis points on a year-on-year basis. But the PAT was impacted by exceptional loss seen due to the restructuring of the Africa business. But a couple of brokerage notes that came out, for the counter. JP Morgan on Godrej Consumer, they're maintaining an overweight with a target price of 1,300 rupees. Jefferies on Godrej Consumer is maintaining a buy with a target price of 1,520 rupees. And on the back of bullish notes coming in from the brokerage notes and good strong set of results coming in, Godrej Consumer is firing away on all cylinders, up 7%.
Absolutely, about 7% jump in Godrej Consumers. But with this, players, it's time to slip into a very short break in this edition of Market Fatafat. Don't go anywhere, we'll be right back.
Welcome back. You're watching Market Fatafat on ET. Now let's continue talking about the stocks that are moving in trade. CarTrade today once again in focus, Nehi.
CarTrade is in focus yet again, and it's on the back of a brokerage note coming in. But remember, it reported its numbers yesterday during market hours. Profit after tax for the quarter came at around 25 crores, up 43%, and they've also received their highest ever average monthly unique visitors for a quarter 4 at 70 million, which is an uptick of 92%, and all of this is organic. But let's shift focus and talk about the brokerage note that has come out on the back of their quarter 4 numbers, and that is by Nomura. They've maintained their buy rating and have hiked the target price to 982 rupees from 887. They believe that the quarter 4 EBITDA has beat the street estimates. Also, strong FCF generation is ahead for the company is what Nomura is penciling in. Focus on capitalizing on strong potential in the OLX segment is what the company is saying, is what Nomura is saying the company should do. And they're also saying that margin improvement looks largely on track when it comes to this company going ahead. So positive note coming in from Nomura for CarTrade, and on the back of that, the stock is up 5% as we speak.
All right, so that is all about the CarTrade. But Chandan, coming to you, let's talk about PNB. How is this one looking on the charts to you, given the fact that all the PSU counters have come under pressure of late?
Yeah, so some profit looking could be there in the PNB and other PSU name. The stock has been making lower highs, lower lows from last 4 trading session. Gone below is 50 EMA, so I believe some more corrective move could be there. It has hurdled near 127, and because of that, it can drip down towards 115 marks. So some weakness could be there in the counter.
Right, that's today coming in on PNB, but moving on then, and let's shift focus to some of the pharma counters as well. And Ankita, you have took Suven Life Sciences. Take us through how are the earnings this time around.
If you look at the counter, it saw a sharp decline right at the start of the day. In fact, it was trading with cuts of 1.5%. Right now, it is it's trading with cuts of 0.6%. But let's look at what the numbers look like for Suven Life Sciences. On a consolidated year-on-year basis, the revenue saw a decline of 8.7%. They also saw a net loss of 27 crores versus 28 crores on a year-on-year basis. The EBITDA was also, at a loss of 30 crores. However, the company has approved the reappointment of, Sri Venkatashalu Jaswi, who is the MD of the company, for further 5 years period commencing November 1st, 2024. But this stock is down and out, and not a great set of results coming in for Suven Life Sciences.
Alright, so that is Suven Life Sciences. Let's talk about Fusion Micro, then Snehi, and this one also in focus on back of earnings.
Well, yes, rather weak set of numbers coming in from Fusion Micro. While overall their numbers are not very weak, it is the credit cost that has weighed on profitability this time around. Let's take a look at what the numbers are like. Net interest income has come in at 361 crores versus 276 crores, which is an uptick of 30% on a year-on-year basis. Operating profit also is up 31.5%. PAT has also come in at 133 crores versus 114.5 crores, which is a healthy uptick of 17% coming in. Disbursements are up 24.5%, and NIM has also seen an expansion of 1% on a year-on-year basis. When you take a look at its sequential performance, this is where the problem lies, and this is what is weighing on the stock today. Cost of funds has slightly reduced at 10.2% versus 10.4%, but the real trigger for the downfall in the stock is the credit cost, because that has increased from 1% to 1.2% just in a span of 1 quarter. And their growth stage 3, which is their GNPA, is also at 2.9% versus 3%, so a very small improvement coming over there as well, not as much as what the street was expecting. The major trigger also is what's happening in Punjab, because Punjab contributes to 2.8% of the total AUM, and that contribution has fallen to 2.8% from 5.2% annually, and collection efficiency has also dropped from almost 94% to 75%. So on the back of all of these triggers coming in for the stock is not doing very well in today's trading session, down almost 5% as we speak.
Alright, moving on then, and let's focus to Granules India then. And Chandan, all these pharma counters are seen to be drifting lower, at least the large cap pharma names, but Granules India in the past 6 months has given a return of close to 11%. But after this consolidation phase, do you believe that the stock is ready for a breakout or maybe some more pressure?
Actually, the stock is at level where it can see make or break zone. Multiple supports are there near 405. So as of now, the weakness is visible. If it holds below 405, then I think downside could open towards 385. So as of now, the weakness is there. With hurdle of 420, it can go down to lower levels.
Alright then, that's about Granules India, but let's shift focus to what DCM Shriram is doing, because this counter was in focus on the back of its earnings, and we have seen a fall in the stock of DCM Shriram, because just today the stock was down after the company did miss the street estimates as well, and the operating margins actually squeezed by 180 basis points to 13.1% in the March quarter when it comes to DCM Shriram, and otherwise as well operationally the margins were actually lower than what the street was expecting in. The company does operate that is involved into production of fertilizers, pesticides and sugar refineries, and apart from that, if we talk about the EBITDA, that has also seen a drop of close to 23% on a YOY basis. So not a great set coming in from DCM Shriram, and hence we are seeing a cut of almost 4% in today's trading session.
Alright, that's DCM Shriram reacting to its numbers. Let's talk about Gujarat Flora, Ankita, and why is this one in focus?
Gujarat Fluorochemicals is in focus today. In fact, it is absolutely knocked down in trade, trading with cuts of 4%. It's on the back of the results that this company posted. It reported a decline of almost 70%, on the net profit on a year-on-year basis at 100 crores for the fourth quarter. The company's revenue from operations dropped 23% to 1,133 crores on a year-on-year basis. The EBITDA also tanked 55% to 237 crores in the fourth quarter. The EBITDA margin also stood at 21% in the quarter as against 36% on a year-on-year basis. The GFCL EV, a 100% subsidiary of GFL, has also announced the commissioning of the initial phase of its integrated battery materials manufacturing facility. That's the other news coming in on this particular company. But weak set of results is what this company has reported. And on the back of that, we can see the stock down and out 4% in trade.
Also, what's actually impacting the stock also is the fact that in the con call, Shrishti, the company said that US has cut the anti-dumping duty on 2 of the refrigerant gases, and also what they're saying that if the cuts actually go through, then the Chinese companies will have enough capacities to take over the US market. This is what analysts have said, and it doesn't bode well for Gujarat Fluoro or, for the matter of fact, SRF.
Yes, absolutely. SRF was also down in trade today, and the earnings are also due. So both of these companies are in focus on the back of this news flow. But moving on then, and let's shift focus to Urban Smart Spaces. And Snehi, take us through the earnings of Urban Smart Spaces. Clearly a surprise there.
Shrishti, a surprise on that front, and good set of numbers being posted by Urban Smart Spaces for quarter 4. The revenue has come in at 117 crore rupees versus 93 crore this time last year, which is an uptick of almost 27%. Net profit is also come in at 19.5 crore rupees versus 10.5 crore, which is up 86% on a year-on-year basis. EBITDA also has come in at 31 crore rupees versus 20 crore, a very healthy uptick coming in of 54% over there as well. Margins have also seen a good amount of expansion at 26.7% versus 21.9%, which is up 477 bips on a year-on-year basis. So on the back of these good numbers that are being reported by this real estate company, the stock is up 2.5% as we speak.
Alright, so that is Urban Smart Spaces for you. Like Snehi said, good earnings for the realty company, but another company which has posted good set of numbers and is from the FMCG pack is Marico for you. If you see the stock at one point in time, it was trading higher by about 9.8%, now hovering around 9.3%. Uptake is the top gain on the Nifty FMCG index today. The company is saying that they expect the revenue growth to outpace the volume growth in FY25. They said that it would aggressively scale up the food and the personal care portfolios. What brokerages are also saying, the Marico's successful efforts to continue to diversify its India portfolio and focus on driving direct distribution can provide longer-term revenue growth triggers. This is the word coming in from Investec. So on back of the positive notes coming in from brokerages, in fact, a good solid commentary coming in from the management itself, you can see Marico trading higher by about 9.3%.
Okay, that's about Marico. But moving on then, and let's shift focus to another ET Now exclusive, wherein Finance Ministry and Oil Ministry held a meeting to work out a strategy to revive ONGC Petro Editions Limited. For more details on this, we are being joined by Prakash Priyadarshi.
Yes, we are learning from our sources that the Finance Ministry has held an important meeting with the stakeholders on revival of ONGC Petro Editions Limited, which is a joint venture company between ONGC, GAIL and JSPC. We are given to understand that the officials of Finance Ministry and Oil Ministry have discussed various options to make the company profitable in next 2 years. We are also given to understand that the government is mulling to provide a dedicated financial package that will include a variety of options and likely to be announced after the election. And these efforts are being made to bring down debt equity ratio of the company in order to make it viable. In addition to that, sources are also informing that the dedicated financial package likely to include the supply of domestic gas to ONGC Petro Editions Limited. Currently, the company is largely meeting its requirement through LNG, which is relatively costlier and taking its overall production cost higher. Now the government is mulling to provide domestic gas to the companies in order to bring down its overall production cost. We are also given to understand that the Finance Ministry is likely to approve the ONGC's proposal to make further investment in its joint venture company. As you are aware that the ONGC has already made an announcement for further investment of more than rupees 18,000 crore in ONGC Petro Editions Limited to make it profitable going forward. But that will also lead to restructuring of existing shareholding pattern where the ONGC will emerge as the largest shareholder.
Alright, thank you so much for that. Exclusive details, Prakash. But with that, we are totally out of time on this edition of Market Fatafat. It's a goodbye from Shrishti, myself, and the team that put the show together. Also, thank you, Chandan, Osho, Snehi, and Ankita for helping our viewers decode why the stocks are moving in trade today. And with that, it's a wrap. Thank you so much for watching.
Great news for those who want to rise with
If you like this video, then like, share and subscribe to ET Now.